A trader's confidence in executing trades comes from the efficiency of his strategy as a result of backtesting previous price data. Now, if you use the previous price data to backtest your strategy, it gives you confidence and it helps you with clarity, right, on your win rate as well. So that when you're experiencing the loss, you are not shaken because you've determined your win rate through backtesting using previous price action, right? So in this video, I'm going to show you how to backtest properly, how to level up your trading game, and to have clarity on your strategy. So guys, if you like videos like this that help you level up, please go ahead and click on the subscribe button and also click on the like button as well to help this channel grow. So without further ado, let's dive into the video. So what is backtesting? It simply means applying your trading strategy to past data to see if it actually works, using past data to forecast future price action. Like I already said, price always repeats itself. That's why we have something called chart patterns, right? Because patterns always repeat themselves. So if you have your strategy as well is a pattern, right, that occurs in the market. So for you to actually have the confidence to trade your strategy, which is also a repeated pattern, you need to determine the win rate of that pattern using previous price action, right? So let's quickly look at the benefits of backtesting before we go to our chart, right? To carry out proper backtesting. Now, what are the benefits? The number one is it helps you understand your strategy's performance without risking capital, right? Now, when you go to your chart to actually backtest your strategy, you don't need money to do that. You don't need any capital to do that, right? Number two, it helps saves money by filtering out what doesn't work, right? Now, this is where it helps you increase your win rate because it shows you what doesn't work with your strategy, right? Because when you've backtested your strategy and you've journaled your strategy and you know and all your observations and all, you get to know the things that doesn't work. Yes, it is your strategy, but then you get to actually refine it, right? So the number three, and it helps you save your money as well, right? You don't make unnecessary losses. Number three thing here is it helps you build confidence to trade your setup when the opportunity arises. Now, after you've determined your win rate through your strategy's performance, now you can confidently take a trade because you know that even if you take a loss, you're going to win the next trade, right? Let's say out of 10 trades, if you're winning five and losing five, if you get three losses in a row, you will not be shaken because your strategy has already told you that you can actually lose three trades in a row, but then you can also go ahead to win four trades in a row as well, right? So whenever opportunity presents itself, you just go ahead and take it with confidence. Then the number four thing is refining your strategy by finding out what works, right? Now, when you're journaling your backtesting results, right, and the wins and the losses, you get to observe how the wins came about, right? The patterns that actually give you that win, though it is your strategy, but then there are little tweaks to it, right? And the patterns also give you a losing traits as well. So what you want to do is you want to start refining your strategy, right? You want to start fine tuning it to make sure you avoid those type of trades that gives you losses because sometimes these trades are used as inducement, right, to get your strategy to become a liquidity provider in the market, right? So that's one thing that backtesting will do for you. The number four thing, the last thing here is understanding market behavior by analyzing past data. Now, like I already said, market patterns repeat themselves. The market does not have any new way to move, right? Other than the way it has moved in the past. So if you actually study the past behavior, if you actually backtest properly, you're going to or have an in-depth understanding of how the market moves. And this is going to help you have clarity on market movement and price action. Now, so the last thing we are going to look out for before we go to our chart is how to actually backtest, right? How to backtest. Number one, ensure you have a well-defined strategy, right? Before you actually start backtesting, ensure you already have a strategy and not just having a strategy alone, but ensure you have all of the parameters that your strategy need. For example, number one, you need your entry strategy, right? What is your entry point of interest? Is it order block? Is it fair value gap? Is it breakout block? What is your entry? And also, what is your exit as well? Are you targeting a high? Are you targeting an order block to exit the market, or are you just going to swing it? What is your strategy? And also, what is your risk to reward as well, right? What is your risk to reward? Is it 1:3? Is it 1:4? Is it 1:5? You also need to have this defined as well, right? When you have your strategy defined this way, it will make backtesting easier for you because you already have clarity of what you are looking for in the market. Then the number two thing is you're going to journal your backtesting results, right? You're going to journal the wins, the losses, and also the missed entries as well, right? You're going to journal the missed entries and also the break-even trades you got, right? If you're somebody that, break even your trade, you're going to journal all the break-even trades you got, the win rate, the win, the losses, and the missed entries. Now, the reason why you should journal your missed entries is because a lot of traders tend to find themselves because of fear of missing out, which we refer to as FOMO, right? Let's say price gets very close to your entry like this, and then it decides to reverse, right? A lot of traders, what they're going to do is they're just going to jump into this market to market execute, right? And sometimes price will just come back and take them out, right? So you see, and maybe because of the market execution, they'll just place their stop loss at the high that price got a rejection, and when price will come back to this zone, it will just take the high out, react to the original position right before selling down, right? And this will make them lose money instead of they'll end up losing a trade they were supposed to win originally, right? So that's why you also need to study your missed entries and all of that. The number three thing is pick a time frame, depending on the type of trader that you are. Are you a swing trader? Are you a day trader? Are you a scalper? Right? Now, if you understand the kind of trader you are, then you know the kind of time frames to work with when you're backtesting, right? After you've gotten your general market bias, you can then go down to your favorite time frame based on the type of trader that you are to begin to look out for how price played out when your setup appeared, right? And then the last thing is use platform that has replay futures. Now you can use platform like TradingView. I'm using TradingView right now for this video, right? And this is the replay button for TradingView, right? This is the replay button. I can just decide to cut price, right? I can decide to cut price and then play price just to give me a simulation of the real market, right? I can decide to cut price. I can decide to cut price even up to this zone. I can decide to cut price all the way here, right? And then I can play price. I can then go ahead to play price to see how price moves, right? And this is actually very, very important because it gives you, a feel of the live market. It shows you how your pattern is being formed, your strategy is being formed, and how price reacts from that zone, right? You get to see how price will move close to your stop loss before eventually going to hit your TP. And when this is playing out, once you get used to it, using these replay futures, when you see price playing out, maybe you have a trade going on and you see price getting very close to your stop loss, you're not moved because you already know what price does, right? You already know the behavior of price. But then if you don't have the money to subscribe, there is a way you can also go about it. I'm going to show you guys how to go about it if you don't have money to subscribe your TradingView as well. So don't worry about it. If you don't have money to subscribe, it's not a problem. There is also a manual way you can backtest as well. So guys, let's go to our chart and let's backtest and see how it goes, right? So please pay attention to the concept that we discussed here, right? And after this video, go to your chart and practice. So guys, at this point, if you haven't subscribed, please go ahead and click on the subscribe button. And also, everyone, please click on the like button just to help this channel grow, right? Now, so the first thing you want to do when you want to backtest your strategy is you want to ensure you are following the trend. Regardless of your strategy, if you don't trade in line with the trend, you're always going to get stop losses, right? You're going to get more stop losses than wins, right? So now this is GBP USD. Now we're going to do our yearly markup here, right? This is our 1 year time frame. So it means each of these candles took 1 year to be formed. And the first candle we have here was formed in 1971. So you can imagine, right? So this strategy was formed before most of us watching this video right now. So yeah, so now we then have, this is a perfect downtrend, right? This is a perfect downtrend. GBP USD is in a perfect downtrend where we have higher highs and higher lows. right? So price just give us a new low recently, but then price got a very strong rejection from this, right? Now, what are we then anticipating price to do? We are either anticipating that price is going to come back to, just keep going down to properly break this low, right? Or price is going to probably move to 50% of this zone. Where is our last higher high? This was our higher high that broke this higher. This was our lower high, sorry, that broke this lower low, right? So this, from this zone here to this low here, let me do this. From this high here, this high right here to this low here is our swing structure. This is our current swing, right? This high to this low. So this is our external liquidity. So either price retrace to 50% of this zone before another leg down, or price is just going to continue going down before retracing up, right? So what are we going to do? We're going to use our Fibonacci tool to just try to mark it up and see where price is going to possibly react to, retrace to, right? So we expect price to retrace to at least this zone before, pushing downwards. But then price can also just decide to, come back here and then before coming here and then something like this, right? Just like he did here. You see, he broke this low, although he broke this low properly, went up and then before coming down, right? So yeah. Now, this is not a time frame we're actually working on. We just want to get a general overview of the market, right? Now, having understood this, we are then going to go to maybe our weekly time frame, right? Let's just see what price is doing on the weekly time frame, right? On the weekly time frame. Then we're going to go ahead and do our markup again for our weekly time frame. We want to know what price is doing, right? Let me just wipe all of this now. Now, so if you look at it, look at the structure we have here. We have a BOS here, right? And we also had a BOS here as well. We had a BOS here. We had a BOS here as well. So this is a perfect downtrend, even on the weekly time frame, right? And we had a BOS here as well, right? So you can see this is a perfect downtrend by GBP USD, perfect downtrend, right? And then we have another BOS here, right? So what are we anticipating price to do? Like I already said, price can decide to either come down to give us a new low or price can retrace to, remember this is our swing high, right? This is our swing high. And this right here is our swing low, right? These are swing high and our swing low. So we're anticipating that price can just come down here, or price can retrace to 50% here before coming down, right? But whichever it is, we are just going to work with based on what price is doing right now. So what are we going to do? We are going to narrow down to where price is right now, and we'll see what price is doing now. So if you look from this zone here, within this internal structure here, within the internal structure that we have here, see how price has been moving. See how price has been moving. Price has actually been creating series of lower lows here. Just look at it. Lower lows, lower lows, right? Lower lows. Lower lows here. Lower lows here as well, right? You can see what price is doing, creating series of lower lows here. So this is a perfect downtrend, right? Even on this internal structure by price, right? Now, the reason why I'm marking up this is just to give us clarity, right? Now, just look carefully how price has been moving, right? Just look how price has been moving from this zone. Now, after each of the breakup structure, price will always react to the supply zones, right? To the supply zones. If you observe the trend here, price has always been moving down from the supply zones. So what do you want to do? You want to understand, you want to pick out a valid supply zone, right? Or a valid demand zone, depending on the trend. If it's a downtrend, you use your supply zone. If it is, a buy trend, you focus on the demand zone. But since this is a sell trend, will be focused on our supply zones, right? And we want to make sure that our supply zones has imbalance and there is a break of structure afterwards. Guys, if you haven't seen my video on supply zones or demand and supply, just scroll to my channel. You're going to see a video on demand and supply, right? And also if you haven't watched my video on price inefficiency as well, right? And you have to understand that concept. So what am I saying? Now look at price reacting from supply zones, right? From supply zone here Price also reacted from, supply zone here, right? Supply zone here. You can see that this our supply zone actually gave us a breakout structure here with imbalance, right? Now we had this imbalance here, right? There's an imbalance here before price came to fill it back, right? But that doesn't change the fact that price actually broke this low with an imbalance, right? So we always expect price to come back to that supply zone that was responsible for this impulsive break to the downside, leaving imbalances behind. So this, from here, we would have started selling. Now, if we would have started selling from this zone all the way down. Let me pick up demonstration. So we would have started selling from this zone, would have sold all the way down to this new breakout structure, right? Would have sold down here. Look at what price also did here as well. Price reacted from the supply zone and then sold aggressively down, leaving imbalances behind. Now, which demand zone is responsible? You can also see that here, this is the this is the zone, right, that was responsible for the sell down, right? So this would have been this was our first area of picking trades, our second area of picking trade. This is now our third area of picking trade, and then would have sold all the way down, right? Now, also this our zone here gave us a BOS as well, right? Remember I said your demand zone will also have to give you a breakup structure, right? Just look at it, right? We also have a new zone here that price came to revisit. Remember, this would then be our fourth zone of trading from. So that means we would have traded from this first zone to take profit at this low, traded from the second zone, take profit at this low, traded from this third zone, take profit at this low, right? And now we are trading from the fourth zone to take profit at this low as well. So you can see, and this is the weekly time frame. Imagine if you pick a trade from this zone and sell down here. I'm sure it will give you probably close to 1:50 or even more, right? But then that's not what we are after. We just want to keep catching trades around the trend, right? Now we have a new break of structure. Look at what is price doing again. Price is still reacting from demand zones. Now, look at this demand zone here. Left imbalance behind. Price went ahead to what to give us a break of structure, right? So then we can decide to say, okay, this is a valid demand zone. We can go ahead and pick it, right? See what price did. Price gave us a reaction, right? But eventually came back to tap. We have a higher, here we have a higher demand zone that's also valid, right? Price came in to tap this demand zone. This our demand zone also broke structure. It broke structure here, right? It broke structure and also left a tiny imbalance here, right? So that's why price had to come back to pay attention to this supply zone here, right? And that is what price is doing right now. This is what price is doing right now. So this is the current leg we are in. So now having understood that price, having backtested on the weekly time frame, that price always sells from supply zone, valid supply zones that leaves imbalances behind, right? What do you want to do? You want to look out for supply zones that you will be selling from. Now, let's say, for example, this is where price is right now. Now we have also a new supply zone here as well that has broken this, this internal structure, right? Because this was a higher low. This was a higher low, right? This was a low that price moved from here to create this high, right? To take out this high here, right? So price already took out this low here. So what do you anticipate? That price will also come back to this supply zone, and this our supply zone also left imbalances, right? Before breaking this structure, it left imbalance. So we expect price to come to this zone and give a reaction to the downside again as well, right? So this is a future forecast, right? But we are focused on what price already did. We are backtesting now. So what do you want to do? You want to then mark out your zone. Just mark out what price is doing right now to backtest your strategy. You can decide to backtest all the way backwards, right? But if you don't have this replay button, if you're not subscribed on the trading view, to scroll all the way back, right, will be a lot of work, except to just do it on the higher time frame like I'm doing it right now, picking the valid demand zones, right, on weekly time frame. Now, when you pick the valid demand zone on weekly time frame, you're going to go ahead to your lower time frame where you execute your trade, either 1 hour, 30 minutes, 50 minutes, depending on the kind of trader you are, or even 4 hours, right? Then you're going to then look out for what a confirmation entry, right? You look for a confirmation and then you can start selling. So let's go to because I use 1 hour time frame most of the time. So let's go to our time frame and just look at what price is doing here. Let's go to our 1 hour time frame and see how price are selling from this our zone, right? Now the reason why I'm actually using this, the reason why I'm using these, I'm not using the replay button is because I figured most of you would not have your trading view subscribed, right? And that's why I'm showing you guys how to do the manual back testing, right? This is even a lot of work for me. It would have been easier if I'm using the replay button because my trading view is subscribed, right? But then I'm not making the video for myself. I'm doing it for you guys. So that's why I'm just, using this manual method, right? Now, so once you have price, now we have price at our demand zone. So let's say we actually cut price here, right? And then price bought all the way to tap into our demand zone. What are we going to start anticipating at this point? We'll be looking forward for price to give us a change of character, right? One price will give us a change of character. Now look at the first trade that we got. Price actually took out, this higher low here, right? And even this higher low as well. If you go to the 15 minutes time frame, these structures will be more pronounced, right? On the 15 minute, if to be more pronounced, look at this. Price broke this low as well, right? So we have a one break and a second break. Look at what price did. Price came back to the demand zone, right? To the demand zone that was responsible for that break. So that means we would have caught our first trade here, right? Would have caught our first sell trade here and would have taken profit from it. So would have, this would have been our first trade, and then we can decide to target this low here as our take profit, right? This low here as our take profit, or you can decide to hold to whatever. I think the whole move gave us, like 1:5 or something. So we can, that would have been a good profit already, right? So this would have been our first trade. But look at what price did again. Price came back and took out this low here, right? So at this point now, where you would want to be looking out for before taking another trade is when price actually takes out this low here, because this is now a strong low, right? When price, because it was here that price moved to give us a new high. But price gave us a confirmation here by actually taking out the low, right? Price took out the low to give us a confirmation of the bearish trend. For aggressive traders, you can decide to say, okay, this is a higher low, price took it out, then price retraced, blah, blah, blah. But then if you actually want to take a high probability trade, this zone here, this is where we got our major confirmation about price reversal. And after this confirmation, look at what price did. Aggressive selling all the way down. Aggressive selling, right? Price started selling aggressively. So let's just try to catch some trades and you will see. Okay, remember we said for our supply zones to be valid, you just have to have a break of structure, right? Now, guys, I'm using just supply and just supply for this back testing, right? As a strategy. You can use whatever strategy you're trading for this back testing, right? For example, for those of you that trade, my model, the break of the A, B, and C model, right? You can see that we are having some A, B, and C models here, right? And then you can decide to be taking these trades, right? But I'm just using supply zones, which is more of a general, strategy, just for everyone here watching this video, right? Just look at this supply zone, for example, right? It was this zone that price moved aggressively to the downside. Yes, we also have another value supply zone at the top of it, but it's not every time that price will retrace to come to this zone, right? So we want to take advantage of these because price gave a very, very, drastic reaction from this zone to the downside, right? So we'll take our trade, and that would have been a very, very good trade for us. We would have caught a trade from this zone here, right? Place our sell position here, and we would have, we would have gotten a good trade. And what would be our target? Our target will be this low right here. Will be this low, right? So target this low here. And that would have given us a 1:10 trade, 1:10, right? That would have been a very, very good trade, right? And then after we get this, our new BOS, what are we looking for next? We are then looking for price to give us a new trade, right? Let me just try to use this replay button so that, we just get a feel of the live scenario. I think I've showed you guys now how to use this, right? I've showed you guys now. So let's say now we have a new break of structure, right? What are we going to do now? We're just going to, mark out a demand. Now, this is our first demand zone, right? Remember, I said price might not always retrace to the upper demand zones or the upper supply zone. Sorry, this is supply zone. This is another supply zone as well. This is another supply zone. They are all valid, right? because this one also left an imbalance, this one also broke structure, leaving imbalance. So these are all value supply zone, and even this one at the top as well. So for this move alone, we have three demand zones. Look at what price did. Price gave us a reaction from the three of them. So we would have traded each of these demand zone and would have made profit, just that it would have been a short profit, right? For this first one, short profit. This second one would have given at least 1:3. And then this third one is the ultimate one, right? So that's why I love picking, the demand zone at the topmost, where the move actually started from. And we would have cut our trade from here, just cut our trade from here, right? We are just, look at how easy it is. We are just following the trend. We are not even stressing. There is no so much, no so much criteria. We just clear and simple strategy, right? This would have given us another 1:10 trade. You can imagine that. And look at what price did again. So now we have a what? We have our new break of structure. We have our new break of structure here. And what are we anticipating again? We'll mark out our demand zone, our supply zones again. This is our first supply zone because it left an imbalance, so it is valid. And then this is our second demand zone, right? It also left an imbalance, so it is valid. Although price already mitigated it, price already came back to mitigate it, right? But the reason why I will not consider this demand zone is because of this huge imbalance here, this huge price rejection, right? Whenever you have this rejection like this, price will always come back to fill at least 50% of it, right? Price will always come back to fill it. So that's why I would have not considered the supply zone, right? But look at what, although price would have given us, some quick profit here, right? But then look at what price did. Price came back to fill up this imbalance here. And that would have given us a good trade as well, right? And then we have another break of structure again. We have another BOS again. Then again, we start marking out our supply zones, right? Now, this is the most valid supply zone here. This is a very, very valid supply zone, right? And although price failed to target this zone here, right? Price failed to target this zone. So that would have been a missed trade by a few pips, right? And that would have been heartbreaking, sorry. Now we have a new swing here, a new break of structure. So what are we anticipating? Okay, price has moved impulsively down without retracing. Now we have another zone here as well, right? What you're going to do is you're going to keep marking all of these valid supply zones, right? Even if price does not come back to it, you just keep marking them because you know that price will eventually come back. And when price gets to that zone, it will, give a reaction, right? So, okay, just like this one now, right? Just look at price sold. Look at how price sold. Price retraced after moving all the way down, right? After moving all the way down and still sold from this zone, right? So guys, this is how you just backtest your strategy. You just keep going back, look out for your structure, right? Now, for those of you that trade my model, for example, for those of you that trade the ABC model, right, you would have said, okay, this is your sweep of liquidity. You would have said, okay, this is now your B, right? This is now your B, and this is then your A, right? This is your A, and then this is your C, right? So what do you want to do? You want to place your trade here. You want to use this to mark your order block, right? You just mark out your order block here, or the last candle there, and then you use your what? You use your sell position to pick a trade from here, cover the protected high, your A, and then you swing it down, right? You swing it down to this low. That would have been a sweet trade, right? A sweet trade using this model. Now, this is how you just keep, going back in time to look out for just structures, right? Just structures. So guys, I hope you found value in this video, right? We can just keep going on and on, but then I don't want this video to be so long, right? But it's the same thing that's been showing you. It's still the same thing playing out. I'm seeing so many examples everywhere, right? Now, so this is now this is where price is right now. This is where price is right now. So what do you want to, now we have a break of structure here, right? This is a break. This was the demand zone that was responsible for this break. So what do you anticipate price will do? Our price will come back here, right? And then give a sell to the downside. This will be our anticipation that price will come back and give a sell to the downside, right? Because price gave us a breakup structure here and even went further to break multiple structures, right? To break multiple structures, right? So you see, price reacted from this demand zone here as well. From this demand zone and give a good sell, right? But for me, I will hold on to this type of demand zone, right? So this is how you basically just trade structure, right? This is how you back test. You just understand whatever you're looking for, right? The take profit, your exit strategy, and all of that, and then you go back in time and you just keep checking out how price moves, how price respects this type of strategy or this type of patterns. So guys, if you found value in this video, please don't leave without subscribing. I'm going to leave a quiz in the comment section just to test your understanding of the concept. Ensure to attempt the quiz in the comment section and I'll check it out, all right? So guys, see you in the next video. Peace.